Hey everyone, Karli Spahr here with OneTrust Home Loans and the Spahr team, and I want to talk a little bit more about inflation, the numbers that are coming in, things that we're seeing, and the sentiment out there. And one thing right at the top of the list is Walmart. Walmart, Target, Amazon, they said no to their suppliers. They don't want to pay any higher prices from suppliers, and they're putting some pressure on suppliers, which is resonating in the PPI report that just came out on Tuesday. This measures things like wholesale costs, say like people selling to your Target, your Amazon, your Walmart. And some other good news last Thursday, in case you didn't notice, we saw a really nice bounce in rates due to inflation dropping. And, are we starting to see a trend? PPI, CPI, PCE is another inflation metric that is the Fed's preferred method of measuring inflation, and this is more of a metric to the overall economy. It's basically reflects the changes in goods and services purchased by consumers. So this new number is set to be released on December 1st, and keep in mind this report is lagging, so it's reflecting things all the way back in October. Another thing that we're seeing is the mixed bag of reactions from Fed members. So everything was humming along good based on the new reports, and then Bullard decided to open his mouth today and talk about how he thinks the Fed funds rate should be 7%. Guys, we are at 3% right now. I don't even know what he's thinking saying things like this, but every time it happens, it sends the market for a spiral. I really think there's smart people out there are going to see through it and not overreact, and we'll see things settle down a little bit yet today. But it just goes to show you how volatile the market is right now. Just one little thing somebody can say. It's not that it was a little thing, but anytime a Fed member speaks, a variety of them are speaking today or have spoken. Anytime they speak, they make reactions in the market. So this up and down spikes that we're seeing are not only because of reports, but they're also because of people that are speaking out there too. So keep that in mind. So let's look at consumer rates. Consumer rates are high right now, or higher. Credit card rates, car rates, home equity, line of credit rates, businesses borrowing funds, they're all higher. And the intention is to inflict pain on people like you and me. And I know this sounds really harsh, but these are not my words. These are coming out of the mouths of the Fed to slow down spending. They want to slow down demand and allow supply chains to catch up. And we are starting to see that happening. Supply chains you're starting to see more things on the shelves, more things in the warehouses. So we're starting to see some of that catch up. So now, remember, I want you to remember, not one single month as a trend, not one report creates a trend. We need to see more of these reports in a positive direction to seeing inflation is going down in November and December to truly be a trend, but we are starting to see things heading in the right direction. So another good indicator is the case freight index, and that is the cost of shipping. So shippers are already stating that they're going to pass these lower costs on to wholesalers, which will be reflected in the 2023 PPI early in the year. So we saw a 4.9% drop month over month in the PPI, and that is huge. So that created the annual percentage from 21% in September to drop to 11% in October by that drop. And this tells us that we're going to start to see the shippers pass these lower costs on to producers and wholesalers. Now for wholesalers, we saw the PPI drop from 8.4% annualized to 8% annualized, which was expected to be at 8.3. So we blew past that. This should mean that further savings are going to be passed on to consumers and thereby continue to lower inflation. Another thing the Fed is looking at is core inflation. This strips out things like food and energy, things that we can't control. They want to look at things that we can control, and they want to see a better balance of supply and demand. And we're already starting to see that. Like I said, you're seeing more stuff on the shelves, more stuff in the warehouse. So we're starting to see that shift. But again, 1 month doesn't make a trend. We need to see more of this data. Looking into layoffs, we've seen a tremendous amount of layoffs, and I know this is really hard for some people to hear, and I'm sorry. I'm just relaying data that's out there. Amazon just laid off 10,000 employees. Facebook or Meta just laid off 11,000. Cisco is planning to lay off 4,100. Salesforce, these are just some top companies with larger numbers. Salesforce plans to cut 2,500. There's countless other companies out there that are laying off and trying to right size. Some reactionary, some proactive ahead of the recession that's pending. While, again, this is painful to hear, I'm not trying to wish any ill on anybody. These are just facts that I'm stating, and this is all pointing to recession. So during a recession, though, the positive, the silver lining that's going to come out of it, we will see the cost of items go down, rates are going to go down, which in turn is going to help us pull out of a recession quicker. And I just want you guys to understand that this recession that is pending is so much different than it was in 2008. Right now, Americans are much more stable. They have more equity than they ever had before. Even if that equity goes down a little bit, they're far ahead of what they were back in 2008. Consumers have more in savings than they ever had before. And despite layoffs, there are still job openings out there. We're also expected to see GDP be positive in the fourth quarter, which says a lot about the economy and that we're still churning out there. This all also points to a strong real estate market. So with inflation coming down, we are going to see rates come down. It's going to happen. And I want you just to think about this for a minute. All this pent-up demand, all these people that are sitting on the sidelines, and I can tell you I have a lot of clients sitting on the sidelines waiting for rates to come down. And I just want you to think about this for a minute. What is going to happen with the largest amount of potential buyers that we have when it starts to shift? And I hate to say it, social media has somewhat of an impact on that, because it's just like when someone gets pregnant, somebody else gets pregnant, you know how that goes. It's the same thing when somebody hears something on social media. Hey, my friend's buying a house, I need to go buy a house. All of it just dominoes, right? So all of this demand is going to come back off the sidelines, want to buy all at the same time. And let's just go backwards 2-3 years into the demand problems and the inventory problems we had. So what's going to happen? We're going to see some prices go up again. So I just really want some people to think about it. If they have the potential to buy today and they can find a home that's in an area, the type of home that they're looking for, let's get off those sidelines and try to make something happen right now, because you're going to be further ahead by paying less for a house right now, getting more seller concessions, getting more inspection items taken care of. And those seller concessions can help you buy down the rate to make that payment more affordable. You can refinance when rates go lower than what you bought it down to in the future. So that's something you don't need to worry about right now. But what you can worry about or control right now is you can buy something for a better deal than what's going to happen when all that demand comes off the sidelines again. So I know not everybody is going to fit into those categories, but if you can, let's have a discussion and do some comparisons and see, you know, what happens, the what if scenarios. We can certainly look at that. There are a lot more avenues that we can go down. We have temporary buy downs, bridge loans, permanent buy downs, again, inspection items, seller concessions. These are all things that we can work with to help get you into a home, or if you have clients that are looking, happy to talk to them. But again, this is all good news, even though some of it doesn't sound great. It means we're starting to see things going in the right direction. It's not a trend yet, but we are heading in the right direction. Karli, Spahr here. I hope you have a fantastic day.